That confidence is not lost. It just moves. What does it move into? Because what is a treasury? A treasury is the promise to pay dollars. And what is a dollar? A dollar is a promise to pay gold, for God's sake. That's what it is. It still is. That's what people don't want to understand. They don't want to come to terms with that. It still is right now. Dollars are a promise to pay gold at 42.22, which cannot be fulfilled. So now it is a promise to pay gold at whatever 4,056 or whatever it is. But once everyone wants to take advantage of that promise, it's not going to be fulfillable at that promise either. So the confidence is lost from the treasuries and it moves into gold. So the purchasing power shifts from treasuries holders and everything that's based on treasuries, which includes stocks, down into the gold and silver holders, which is where the purchasing power sinks into. And then all of a sudden we can buy everything and they can't buy anything.
Rafi Farber provides a clear overview of the fundamental changes occurring in the monetary system. He asserts that gold is money in and of itself, not merely an investment or inflation hedge. All other forms of money, including bonds, dollars, and credit in general, are just promises made on top of actual money, which is made of gold and silver. Farber contends that the breakdown of those promises is what most people refer to as inflation. Value does not vanish as credit deteriorates, rather it returns to actual currency. He thinks the rising of gold has been utterly misinterpreted by mainstream finance. The collapse of confidence in the global loan system is the issue, not geopolitics or fear. Farber urges us to reconsider the concept of money. The universe begins to make much more sense when gold is used in place of dollars or credit. As word gets out, people will start chasing money instead of just assets. At that point, real hyperinflation starts when credit collapses against the stable value of gold and silver rather than prices increasing. Be sure to like, subscribe, and hit the notification bell for more insights into gold, silver, and precious metals investing.
In terms of time, I don't know if we have a lot of time. We have a lot of consciousness changing, but consciousness can change very quickly. That's what hyperinflation is. It's one day credit is money or credit works, and the next day it does not. And the main point that I want to hammer here is that when gold does things like this, there is the general confusion among the mainstream media. They're like, oh, gold, we don't know why it's going up, but it's generally a safe haven asset and an inflation hedge, and that's why it has historically done that, and so people are going back to it because they always have, and we don't have any other answers other than this is tradition. That's not why. The answer is that gold is money right now. It always has been money, and all the other stuff is credit, and credit is based on money. The purchasing power of credit is based on money. You cannot have credit without it first being based on money, and all the other credits are credits based on the main credit, which is the US dollar, which is based on money. Everything connects. And that's why it's described as an inflation hedge, because it's just money that isn't inflated. And I would challenge the viewers of this show, and your viewers generally, and my viewers and Lynette's viewers, to play this little experiment in their head. Instead, in any sense that you could use the word dollar, or sorry, that you could use the word money, instead of saying the word money in any sentence that you say or any sentence that you hear said on the media or from your friends, instead of the word money, just instead of the word dollar, instead of the word money, just use the word gold or silver. Just use that. And then you'll see how everything fits into place. You'll see how the gold and silver are the money. They're not an inflation hedge. They're just money that's not inflated. And as credit loses value, it loses value into money itself. That's what's happening here. The mainstream media doesn't get it. The people don't get it yet, but they think that maybe Bigfoot is real. Maybe the stackers are not totally insane. Maybe this is going to happen again, as it's happened every single time without exception. Every time credit collapses, gold goes to infinity in terms of that credit. There will not be an exception this time. The only difference this time is it's global, and this time it's everything, and this time there are no escapees. I think that mainstream Wall Street firms are all just followers of each other, and they follow each other in a circle, and they just run after each other faster and faster. And that's what the business cycle really is. It's just a bunch of copiers following each other in a tighter and tighter circle, chasing each other's tails. It's like, instead of one dog chasing its own tail, it's just a bunch of dogs chasing each other's tail. And once the dog sees that somebody's tail is, over here, it'll just change, and then the circle will go to another direction and start spinning in another area. So, do I think that Wall Street will always chase the asset that's going up? Yeah, they seem to do that. That doesn't take much smarts to say, oh well, now gold. Well, let's do the experiment that I recommended doing at the beginning. Like instead of saying gold, say money. Instead of saying when people usually say money, say gold. When people usually say gold, say money. So if money is at an all-time high relative to dollars, then should you go after money instead of dollars? Yeah, I mean, it's not going to, you don't have to be so smart to do that. Uh, and do I think other people will start to chase money also when they realize that dollars are falling? Yeah, I think they will. And that is what hyperinflation is. It's when everybody realizes that they need money because they don't have any, and that the price of everything is falling in terms of money, and the price of everything is rising in terms of credit, in terms of dollars. So everyone will chase money at the same time. And at that point, we should be like, maybe now that everyone wants money, we should maybe buy some stocks. I mean, we haven't gotten there yet, but maybe I'll be the first gold bug or money bug to say, I think gold. I think it's enough gold. I think the whole banking system is now kaput, and let's go after some assets that aren't money now. Maybe I'll be the first one. Maybe I'll be like among the handful of first ones. I'll leave. I'm not married to being a gold bug or anything. When she said lose confidence, and this is just something that just occurred to me. It's true they lose confidence, but there's not a net loss of confidence because they lose confidence in something, and that confidence shifts into something else. But it shifts into something that whatever it is that they're losing in is based on. Because let's say they lose confidence in the government, they lose confidence in the debt, they lose confidence in treasuries. That confidence is not lost. It just moves. What does it move into? Because what is a treasury? A treasury is the promise to pay dollars. And what is a dollar? A dollar is a promise to pay gold, for God's sake. That's what it is. It still is. That's what people don't want to understand. They don't want to come to terms with that. It still is right now. Dollars are a promise to pay gold at 42.22, which cannot be fulfilled. So now it is a promise to pay gold at whatever 4,056 or whatever it is. But once everyone wants to take advantage of that promise, it's not going to be fulfillable at that promise either. So the confidence is lost from the treasuries and it moves into gold. So the purchasing power shifts from treasuries holders and everything that's based on treasuries, which includes stocks, down into the gold and silver holders, which is where the purchasing power sinks into, and then all of a sudden we can buy everything and they can't buy anything.
Rafi Farber makes a compelling case for the undervaluation of silver now, the historical resilience of gold in times of crisis, and an inevitable change in the global monetary system. When credit systems fail, silver, which is frequently overlooked by mainstream investors, invariably recovers its true worth and returns to its historical 15-to-1 ratio with gold. He argues, silver makes genuine money accessible to everyone, not just the wealthy, because it is less expensive than gold. In contrast, gold continues to be the best way to preserve wealth since it provides both opportunity and protection when the financial system begins to fail. Farber sees both metals as lifeboats in a collapsing financial system rather than as speculative investments. He cautions that the globe will experience a wave of worldwide hyperinflation as confidence in debt-based currency declines. On paper, the exchange rates between dollars, euros, and yen might seem constant, so this won't look like dramatic swings. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Rafi, your thoughts on the silver market at present?
Silver's still not doing so well. It seems like it because we're at 50, but what's a dollar? If you look at any other ratio of silver in 1979, 1980, where we were back then, silver relative to stocks, silver relative to gold, silver relative to commodities, it was all much, much, much higher. Back then, we're still about like 82, 83 gold to silver ratio. In terms of just individuals, why would they buy silver? That's just because they can't afford to buy gold anymore because it's too expensive. So instead they buy silver. Why I started stacking silver, two reasons. First of all, I wanted enough to get through any kind of zombie apocalypse. Not literally. I don't think there's going to be zombies. The zombie bat in my background is mostly for illustrations. But, if somebody comes behind me, I have a camera because I can see. Right, thank God we're doing this interview right now so nobody can murder me because I have a zombie bat and I also have a gun at my side. We're at war, so what am I going to do? Anyway, silver is going to spike as it does very quickly. Every time it spikes to the same ratio. It spikes to 15-to-1 gold to silver, because even before we get to gold, If we go back all the way to 1873, what happened in 1873? They call it the crime against silver. Why? Because the monetary standard back then, before 1873, was you give the mint, the U.S. Mint, what was the amount of silver? Some fixed amount of silver, and then you would get a certain amount of dollars, and that was the silver standard of a dollar. It's in the Constitution somewhere, some amount of grains of silver. I don't remember what it is, but it was constant, and that was the definition of a dollar. So that gave the monetary demand for silver. People would deposit their silver to the mint, and then they would get dollars that they wanted to spend, because dollars would increase liquidity, because paper cash, as long as it's honest, is more liquid than silver coins, because if it's damaged, you can give it to the Fed or whoever, and they can give you a replacement bill, and it has 100% of the value, whereas a silver coin that is rubbed off is going to lose its value no matter what, because it loses weight. And there's nothing you can do to stop that. You can do things to mitigate it, but you can't stop it. So honest credit is always better than money, but money is always better than dishonest credit. And the question is, when does money override dishonest credit? When everybody realizes that the credit is dishonest, and then the money goes back to 15 to 1. So eventually you're going to get to 15 to 1. And the two reasons why I bought silver is, one, I want enough silver to get through a zombie apocalypse. Not literally, but some kind of situation where the division of labor is breaking down, and I can spread money into my immediate surroundings to sort of like, give a CPR to the monetary system in my immediate surroundings. And the other reason is, any extra silver that I have, I would exchange for gold in 15 to 1 and then figure out what to do with it later. I don't know. That's what scares me, because I don't know. All I know for sure is at the end of this, gold and silver are going to have all the purchasing power that currencies currently have, or currently imagine that they have. The thing is, currencies don't have that purchasing power, because everyone looks at all of their investments, and nobody's invested in their own currency. They just call that dry powder or extra cash that they're going to invest eventually. But when everybody looks in their portfolio, and they see a certain amount of yen, a certain amount of euros, a certain amount of dollars that their stock portfolio is worth, and they imagine, wow, look at all that potential wealth I could get for that. And that means that I have all these savings, and I can go to sleep tonight knowing that if there's an emergency, I can afford an emergency medical bill, I can afford emergency travel, I can afford this, I can afford that, and therefore I don't have to worry. But the fact that everyone is looking at that number, if everyone sold at the same time, nobody would get that number. You can only get that number if you're the only one selling, or you're only one of a small group of handful of people selling. Nobody can all get that number. So it's all an imagination. And when that all goes away, the thing is, when that goes away, all the purchasing power that actually exists goes into gold and silver. So you're not denominating in terms of the number of stocks that you have in this company and that company. You're denominating in terms of how many ounces you have. And when all that other stuff goes away, then you really know how much you can exchange for whatever amount of silver you have, whatever amount of gold you have.
Rafi Farber presents a profoundly provocative message regarding gold, silver, and the delusion of contemporary currency. He begins by reminding out that, despite its current great price, silver is still incredibly cheap when compared to its historical correlation with other assets such as gold, equities, and commodities. The long-term average of approximately 15 to 1 is far higher than the current gold to silver ratio of about 82 to 1. In the past, silver quickly regains its value when confidence in paper money and credit declines. According to Farber, the fact that many individuals purchase silver just because they are unable to purchase gold does not diminish its significance. He actually views silver as the people's money, which is available, palpable, and able to circulate in times of emergency or financial collapse. Even while he makes jokes about possessing enough silver to survive a zombie apocalypse, the underlying notion is serious. Silver might actually assist sustain local economies in the event that the system fails. Silver had actual monetary demand since the value of the US dollar was determined by a set quantity of the metal. Following the abandonment of silver, the globe transitioned to a credit-based monetary system, in which paper money stood for promises rather than actual value. Farber contends that although completely backed credit may be more practical than cash, dishonest credit eventually fails and forces society to revert to using gold and silver as actual currency. This loop is repeating itself for him. Individuals treat their savings, investments, and cash as though they had actual purchasing power. However, such value only lasts as long as there is still confidence. Those values would be immediately lost if everyone attempted to sell their financial holdings at once. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.